Absolutely massive day for Bitcoin today, folks, and not in the direction we were hoping for. You can see we are currently trading right the way down at a price of $84,600, up from lows put in earlier today at $80,619. This is the real deal. This is a big sell-off. At the bottom of this move, we were down 36.26%, currently up about 5% from there. But the most staggering thing about this is still big liquidations going through. You can see over the last 24 hours, over $2 billion worth of liquidations, $2.2 billion to be exact. And you can see that here on CoinGlass. The majority of those liquidations coming out of the Bitcoin market, and of course the majority of those being long liquidations, long positions, people over leveraged in the markets being forced to sell out of those positions against their will because the exchange needs to cover the risk of the margin on those trades. If we look at the liquidation map now, you can see on the daily time frame we're up to $5 billion worth of short liquidation risk on the opposite side of the market, and sentiment is down even further than the last time we were looking. We're currently at an 11 on the fear and greed index. We are well into extreme fear. I will say the bounce so far from this hasn't been massive. Okay, 5% up. It's decent, but it's not as if we massively overextended and found big buy-side liquidity. There is on-chain data of some big whales selling. There is data, of course, from the ECFs of massive outflows. Actually, historical outflows. I forget exactly what the metric is on that. I believe it's the biggest outflow week for the BlackRock Bitcoin ETF, spot Bitcoin ETF. Don't quote me on that. I'm not certain if that is what it is. But in any case, historic outflows of the ETFs. And we do know from on-chain data that there are some big whale wallets selling as well. And unfortunately, that coupled with how we have failed to bounce out of this move so far in a big way makes me think that we might still have some more room to go to the downside. This caught me somewhat off guard, I must admit. I thought that a great deal of leverage had been squeezed out of the market, but it seems like the lemmings keep on buying this. Continued long side liquidation risk keeps seeping into the market, and until that is all squeezed out, I don't think we're going to find a long-term floor from this move. I think it is likely from right now that we potentially maintain this small recovery, we'll say, for at least a little bit. But there is possibility there, right? If we can get into some of these short liquidations, that we actually start actuating some of those liquidations, and that would equate to forced buying onto the market, which of course would extend the move to the upside from where we are right now. But like I say, what you would usually want to see from a massive liquidation event to the downside, similar to what we saw beginning of October, is a rebound from that move, right? It's like a ball being suppressed underwater, because eventually that move is so extended from where the market perceives fair value of the asset to be, it finds buy-side liquidity and bounces up quite rapidly from there. And that is not really what's happening now. I mean, if we look at this on the hourly time frame, it can be quite hard to visualize this against in the context of how big this move is, right? Down from all-time highs, minus 36%. But you can see that the behavior of this move, to me, doesn't look like a classic wick into liquidity. You can see here, right? We on the hourly chart, we stabbed down once, bought up a little bit from there, stabbed down again, and only now we're starting to find some traction on the upside. So yeah, I still wouldn't be surprised if we came down a little bit further from here, but nonetheless, did treat this as a buying opportunity, of course. Here's a receipt for you, just to keep things nice and transparent. Not a massive order, and not the way I usually like to execute these. Okay, I usually like to have capital on exchange ready to deploy, but in this case, right, use Coinbase on the mobile. It's quick, it's fast, it's efficient, and you can do it from the phone in your hand. So very helpful. And I'm not keeping spot holdings on exchange. That will be moved off to my cold storage. But there we go. And as always, right, the odds of you calling the bottom of moves like this, especially in very volatile times like right now, all the macro stuff that's going on, which we touched on earlier in the week, and we can get into more detail because that situation is unfolding day by day. But all that to say, very volatile times, and the odds of you calling the bottom on this long term, very slim. So it makes a lot more sense to me in my strategy to constantly expose myself to that over time, right? Buy into the market over time, dollar cost average into the market, and accelerate that dollar cost averaging on big down trends like we're in right now, because it just means you have more tickets to win the game, right? And you're trying to win this game, or I'm trying to win this game long term. Short term trading opportunities is great when you can see something unfolding, but right now things are so volatile, it's really hard to find short-term plays, but that's okay, because big sell-offs like this don't happen every 5 minutes. So I'm much more interested in playing the long game in this scenario anyway. So that's Bitcoin right now. Macro situation is evolving. We got that September jobs report data. It was okay, not bad enough, at least for the Fed to increase the chances of a rate cut, but you have still got that sort of controversial situation there where the October report is still missing. We know it's going to have redacted data, and that's very suspicious in its own right. And then we've also got the November data report being pushed back to after the next Fed meeting in December. So you've got this very strange situation for markets to react to, where rate cut would be good, but the rate cut would be in direct response to terrible jobs data or a bad trend of jobs data, which would point to much deeper issues in the economy. We also had Nvidia releasing their Q10 today after their initial earnings report, which was very good. Some things came up in the Q10 which potentially unsettled a lot of investors. S&P down massively today, right, from the local high we put in yesterday to the lows, 3.84%, and that actually brings us lower than the initial sell-off after Trump threatened further tariffs on China. So yeah, the situation in the US, the macro situation, is looking pretty grim. But I want to keep this one focused on Bitcoin, focused on crypto, because once again, a massive liquidation event, right? $2.2 billion worth of liquidations. Markets are incredibly volatile right now, and people jumping in on too much leverage, trading with money that they don't have, is adding fuel to the fire. It's really pretty stunning to see that when sentiment is this low. But that is a narrative which is actually played out across markets, right, into traditional markets as well, in equities right now. Sentiment is really low, but leverage is really high. And yeah, I mean, it's leading to incredibly volatile times. So that's what I'm doing right now. Focusing on the long game, focusing on building up allocations, spot holdings, I should say. And yeah, I mean, just one more time, right? The idea of that isn't that my Bitcoin purchase today makes me money that I'm going to take out of the market tomorrow. That's not what I'm trying to do here at all. I just know that we're trading at a 36% or 31% discount than we were when we were at the all-time highs. And if we bounce from here, great, I got some Bitcoin in today. If we don't bounce from here, or if we bounce a little bit in the local sense and then keep selling off into a deeper pullback, maybe even a bear market, I'm still allocating every day, and I'm still averaging into lower and lower prices. So when we do eventually turn around, if we do eventually turn around, then I get to capitalize on that upside in years to come. That's the goal of this, right? And most importantly, if that never happens, if this all goes to zero, if we were all completely wrong, then it's not money that I need to pay the bills with. Okay, we're investing here long term. We're not betting the house on this. But there we go. Just my ramblings, just what I'm looking at, just what I'm doing. As always, absolutely nothing I say should be considered financial advice. Purely my opinion, shared for entertainment purposes. But thank you so much for watching. Plenty more to come. Catch you in the next one.